risks and investments. So we're basically talking here about the robo-advisory, we're talking about InsurTech, and how we are basically going to redefine the whole individual interactions with the money, risks and investments. So from a research perspective, this topic matters because personal finance is no longer just about budgeting and investing. It's becoming an intelligent, data-driven ecosystem in which algorithms increasingly shape consumer financial decisions, risk management, and long-term planning. Let me go you through the agenda that we are going to talk to you about. We are living through a major technological shift in financial services. Just as computers and internet is redefining the information access, AI is redefining how financial advice is generated, delivered, and scaled to millions of users. What is especially important is that AI is not simply digitizing old services, it's creating new form of interactions where continuous data monitoring, predictive analytics, personalized recommendations can operate in real time. So what in this 1 hour, 1.5 hour we will be going through is, I'll try to introduce you to the framework of AI. Then I'll make you go through the AI in personal finances, how we are doing it, how robo services are being perceived and being implemented by various financial institutions across the globe, what's the markets, how insurance companies are going about the InsurTech, and how they balance between the InsurTech and human AI balances, how they're doing that. We'll be going through that. And then at the end, I'll try to wrap it up with the benefits, the challenging futures ahead of times in AI era. And then at the end, we will be going through the question answer sessions. So, the motivation for this topic is straightforward. Traditional financial advice has been expensive, limited in reach, heavily dependent on expertise's availabilities. So experts are not available everywhere. AI changes this whole model by lowering the cost, increasing access, and enabling more tailored financial support. So while we are talking about all this, we need to at the same time have this raise deeper questions. If AI can improve the efficiency and access, can it improve the decision qualities, financial literacy, and inclusion? So at the end, I would love to ask each one of you, can they do it? Can AI replace or will it improve our decision qualities vis-a-vis the finances? And is it going to raise our financial literacy? And how about the financial inclusions? So keep those points in mind when we are at the end of the session. So you should be able to clearly tell me about all those things. And what risks will emerge when personal financial decisions are increasingly delegated to these algorithms? So particularly I'm talking about the AI. So in next 1.5 hour, I'll proceed in 5 parts. So first I'll introduce, as I told you, AI in finance. I'll also explain AI in personal financial management. I'll discuss robo-advisories. I will evaluate the benefits and challenges. And at the end, we will close with the implications and Why this structure? So this will allow us from a broader concept of foundations to specific applications to critical evaluations. I hope I'm audible and the slides are visible. So Dr. Sareen, so if you feel somewhere the slides are not moving and my voice is not clear, please stop me then and there. Okay. So let me first, before even we are discussing about the applications, we should begin with this simple point, which is AI in finance is not a single tool. It's not a single tool. So please bear it in mind. It's a broad set of technologies, including machine learning, predictive analytics, natural language processing, and automated decision systems. And all of these are interacting with financial data. And when we are talking about it, let me give you a brief, broader definition of AI spectrum. So we're going to basically classify them in four settings, four dimensions, which is the core definition of it, the functions, the autonomy, and finally the financial use case, how we are using it in terms of finances. So for example, we take the first case of which is the broader spectrum is generating AI. So when we talk about the generating AI, we are talking about that produces new content. So like for example, you all must be using the ChatGPT, Claude, Perplexity, and all the stuff. So they are trying to create the new and using the trained models. So based on the data that have been fed into those systems. So what basically its core function is, it's basically recognizing the pattern and creating a synthesis and then give you the new product which you are seeing in the moment when you are giving the prompts and you're able to generate the content. So when we come to the degree of autonomy, it's basically a very low or assertiveness required. So direct prompting. So you require direct prompting and then you can produce the results. And the financial case where we can use it is in terms of drafting client reports. So for example, you have a client and they want a financial report. So these agentic generative AI will help you in terms of drafting client reports. It can help you summarizing the market news, what's happening in the business world, what the market acquisitions happening, geopolitics that is impacting the financial world, capital markets. So all those things that just out there. And now in terms of when we talk about the agentic AI, when it's the definition, the core definition of it, so it's basically the autonomous actions of achieve specific goals. So rather than waiting for you, they are not waiting for the human prompts. So they are taking and autonomous actions to achieve a specific goal. So you have already fed them what are your goals, what particular time, so they go it automatically do it. So that's why we say it's an autonomous decision making and tasks executions. So when it comes to the degree of autonomy, so we say that these are highly independent and are acting on the precedent rules. So you have not, it's not that it's completely autonomous, but you have already defined the rules for them, A to Z, whatever the rules will be in that time. Depends on the work and the tasks you want to achieve. So that rule book has been already defined for them, and then they set these independently take the decisions. So where and how we are using it, we are using it mainly in terms of portfolio rebalancing. We are trying to see what different risks are involved in financial decisions, and we are using those kind of agentic AI. With that in mind, let's begin with the wider financial context. So when we talk about the wider financial context, so let me introduce you to the AI in finance, how we are going to implement AI in finance. So the introduction of artificial intelligence into financial systems marks a critical turning point in how financial services are designed, delivered, and even consumed. So historically, what we have seen is financial plannings require extensive human expertise. You must have seen whole lots of the people involved in be it MBAs, BBAs, human expertise we needed when it comes to the financial decision making. So significant advisory fees that they used to take huge, and still they are taking the huge much of advisory fees, and often limited accessibility to ordinary consumers. So like an ordinary consumer who cannot afford these financial advisories, I mean it's really hard and difficult for them to have access to those services because of the fee, because of the cost that's involved. Now what's happening now? So because of the AI technologies, they have revolutionized this by introducing automated speed and precision into financial decision makings. So through the integration of machine learning algorithms and real-time data processing. So what AI is doing? So AI is basically enabling financial institutions to analyze larger volumes of financial data, and then based on those financial data, the past data, the historical data, what they're doing is they're predicting the trends, recommending the optimal investment strategies for the individual investors, the businesses, the big corporate houses out there, whoever needs those strategies. Now, what's happening is AI-powered tools are offering continuous monitoring at each and every step, allowing users to dynamically adjust their financial plans based on life events, market conditions, and changing financial goals. So it's safe to say that AI enhances customer experiences by enabling seamlessly digital services, often on a scale 24/7, while also lowering the operational cost for the providers, so that the transformation is both technological and at the same time is at the institutional level as well. Now let me take you to the how AI-driven financial management is happening globally and what's happening in the financial industry. So when we narrow the discussion from finance in general to personal financial management, so we're not here talking about the businesses, corporate houses, or the firms. We're here talking now about the individuals. How basically these AI systems or robo services are. Let's narrow it down to the personal financial management. So the shift becomes even more visible. Traditional advisory services are increasingly being replaced or at least supplemented by automated intelligent these platforms. So no more now you see that people going out there, I mean, at least in developed world where we have seen in US or in many parts of Europe, what's happening is that people no more go in queues and wait for the financial advisories from the experts, although they still do, but a significant portion of them were now using these intelligent platforms. So these systems use machines, data analytics, predictive modelings to help individuals make informed decisions. So what's now going to end the trend is that they personalize these financial plannings, budgeting for the individuals, investment recommendations, and saving strategies at a scale. The integration of these AI has significantly improved accessibility, allowing individuals with limited financial knowledge or lower income levels to benefit. So now no more that these are elite services. These services are being utilized by the people who are in the lower strata or middle class people to benefit from these advanced financial advice that were only once restricted to high net worth individuals. So that's the significant contribution that has been made, because that is possible because of the AI. So one of the most significant innovations here is financial inclusion. So lots of if you go to the lower middle class these countries, or even the lower middle class countries, you'll see that there the financial inclusion is an issue, because not everybody is included in the financial system. So, one of the most significant implications when it comes to AI is financial inclusions. They have provided these services that were once reserved for the affluent clients or the elite class, can now be delivered with the users with modest incomes, with very small incomes or limited financial literacy. So what it happens is AI has revolutionized it. AI has really lowered down the cost. AI has significantly made it so easy for everybody out there with a limited financial literacy. Still, they have made it so easy, the complexities of the financial system so easy, that even the person with low financial literacy can take the advantage of those AI systems. So and what is also more important is the pace of the innovations in fintech. So you will have seen, I'm pretty sure about Indonesia as well, or even in the Middle East or back in South Asia, wherever I have seen, lots of these now no more people are using the currencies for the exchanges, or you will have seen a significant footfall has lowered down the banks, because what's happening is the digital, because of the fintech transfer payments, it has revolutionized the whole system. And you would have seen this dramatically shift, and the digital adaptation grows globally, especially after the COVID-19 pandemic. So during COVID pandemic, you know how we were at homes, but still we were like making the transactions, making the payments. There were home delivery systems going on where they used to deliver your food or something, and then rather than going to the bank for the cash or something, so you were able to transfer the payments through digital these platforms. The fintech that has revolutionized. So what we are here seeing is the transformation is not the technological also, but also the structural. So structurally, you have seen how now the global these financial systems are operating, and this has enabled and fostered the financial inclusion, democratization of the financial services, where no more it is restricted to one class of people, but rather it has democratized the whole financial services. Now, in addition to these fintechs, what's happening is, in terms of the robo-advisories and insurtechs have become central channels now. I mean, in future you will see that's becoming central channels through which what will happen is the transformation will occur. They'll make financial and insurance services more data-driven, more accessible, and more affordable. Now, let me dive you a little bit further into the personal financial management. So, wherein this slide will talk about, mentions about and focuses on specifically on what AI actually does in personal finance. So, when it comes to the AI systems, so what it does is it examines income patterns, spending behaviors, saving habits, the financial goals, and then translates those inputs into tailored advices. How many among you are using the Google Maps when you have to roam around or go around? I'm pretty sure, yeah, okay. So I'm pretty sure almost like all of us are using these Google Maps. And what's happening in Google Maps when we are going? We are basically we're giving our history of visits. If you go to the Google Maps, and you will see that it has already saved your locations where you have previously visited. So basically, that's one small instance where the Google is saving. So similarly, there are lots of apps which are using, particularly with regard to the fintech. What they do is they slowly, not only is like happening, what's happening is the AI system out there, it examines your income pattern, where are the different sources of the income that's coming to you. So it's storing those income. So income patterns are being saved in those AI systems when you're using those fintech services. And then what they do is that they also see that where are you spending? Is it like on the malls, consumer? They're basically checking your spending habits. So on which day particularly you're spending. So you're going to maybe for shopping, for visiting, for having a movie, on food, or in lots of maybe for the female folks, lots of these the makeup, beauty related products consumed. So they basically, what they happen is they're basically checking the saving, your spending behavior, saving habits. If at all you're putting, once you are earning some amounts, you're saving some part in FD or some recurring deposits at individual period of time. So it saves that as well. And then accordingly it can see that where and how we can set the financial goal of that very particular individual. So then these basically inputs are tailored, and then they provide you the specific advice. So you understand now how it's all happening. So in practical terms, so this means what we are doing is we are automating the budgeting, real-time expense tracking is happening, and investment portfolio monitoring. So if now you are a trader, you are an investor, and you have your trading using your mobiles or even your systems, so they are also tracking these investment portfolios and continuously monitoring that. And then they proactively provide you the alerts that you have this much of amount in this particular company. Now because of the bad news which I am seeing, then it says the news what's happening, and then provides you a proactive advice saying that you need to disinvestment or take your investment back from this and maybe suggest some other company to invest. So those things are happening in the real time, and those are the proactive. So now give me an example of this. Can be a system may identify your overspending behavior trends, and that can highlight the cash flow risks such as the portfolio adjustments, like I was saying, the adjustment that you can suggest, so that aligns with your long-term goals. So an important research insights here, although I understand that these are either grad or undergrad students today which we are having, so that's why I didn't made it research intensive. I tried to make it light so that we have a discussion rather than showing you what's happening research wise. So I just wanted to give you an overview what's happening globally, and as a student of the finance or economics, you need to know where the future lies. So the research, what I am talking about is research insights are here. AI is not only optimizing these finance mechanically, it may also reduce the emotional biases in decision making by introducing structured data-based recommendations. So you must have heard about the day trading is happening. So when the day traders, what they do is they buy in the morning, and in the so by the end of the day they have like either divestments, sold it or whatever. They trade in high risk derivatives and other things, options. So they make huge losses. I have seen, or at times they make huge profits as well. And those decisions, most of the times, whenever I have seen that, and researchers have observed globally as well, so those decisions were taken in the spurt of the moments where the emotions were involved, rather than the data dictating their financial decision. So this AI will try to structure that, and based on the data, we provide you the recommendation that you should be doing. So the market for AI-driven financial management solution continues to expand. So that's going to expand. So reflecting increasing adoption by individuals seeking accessible, cost-effective alternatives to traditional financial advice and services. So these two tools, what will happen is they will reduce the behavioral bias that we are having, because each individual has, because I'm sure there might be the courses which you might have taken on financial behavior as well. So where we try to apprise you about how these financial the human behaviors impact the financial decisions. So emotional decision making is being reduced, which often is associated, most times research has found it, even in my personal experience I have seen that they have resulted in poor financial outcomes. So that will get reduced. So in that sense, what happens is AI can support not only just the efficiency, but also better judgments, the stronger financial self-discipline. Overall, AI will enhance the financial literacy by providing actionable insights and enabling individuals to take control of their financial future with confidence. Now, while we talking about these things, let me talk about the shiny objects and tools that AI is bringing to. So at this point, it's useful to introduce the balanced view in terms of, although I have given you so much of things what AI is doing and what AI can probably do in the future, which as of now you must have also in many countries happening. So AI is often treated as a revolutionary force, but one perspective presented in this slide is that it's not better understood as evolutionary tool, similar in like significances in terms of internet or computer. So I'm pretty sure about, so Dr. Zaharin will relate to it when there was like no mobiles or the internet. So how the even internet advent was like a revolutionary that time, and even the inclusion of the mobiles when we heavily relied on the telephone phones. When we were still kids, we were like really used to the landline phone systems, and then abruptly these mobile phones came, and then how it revolutionized the whole economy, the whole market, and similarly the advent of internet. So similarly, take this AI as a new advent, and it's as a revolutionized force and evolutionary tool. So at present, when we see in its current form, AI is especially stronger in natural language instructions. So I don't know whether there are courses on programming languages that you do, maybe R or maybe C or maybe any other language, Python or something. So what happens is that over there you are using the structured, you need to know the syntax of that particular language, and you use to write the programs. But in case of the AI, it's following now not the programming particular language, it understands our natural language, so that the querying and answer, so as we are interacting with the humans, so the same things we are doing with the AI, where we are querying whether through voice or through the prompts. So the coding support is no more needed, it's already out there. So the portfolio refinement using broader data inputs are happening. So however, it does not act autonomous in financial execution. So bear it always in mind that financial when it comes to the robo advisories, when it comes to InsurTech, that it's never going to be completely autonomous. So there has to be always a human element, human decision making at the back of it. So it's not going to be completely autonomous as far as like the research is showing. So that distinction matters, because why it matters is many cases AI advises, interpreters, recommendations, while execution remains in the domain of robo services, formal financial platforms. So the technology is powerful, but its role is and must be described accurately. And who is going to do that? That's the humans. Now, let me take you to the now. Once we have understood AI, the role of AI in overall financial management, then the role of AI in personal financial management. Now let me take you to the robo-advisories and how they are functioning. So what's happening in, I'm pretty sure, so when you go to the bank, if there is at all any query or something, you go to a particular desk or the counter, you ask for somebody who's at the customer service, ask me your queries, then they solve it and then they tell you to that this is how you can address. Now what's happening because of the robo advisories? With that concept foundation in place, so we can now move into one of the most visible and applications of AI in personal finances, which I told you about is robo advisories. So it's important because it operationalizes many of the promises which we have discussed so far, such as affordability, automation, consistency, and accessibility. So robo advisories basically refer to automated financial advisory services that uses these algorithms and AI technologies to provide investments and advice portfolio management with minimal human interventions. So human intervention is going to be there, but that's going to be minimal, that's going to be limited. So these platforms, what they will do is they will operate by collecting the data from the users, including their financial goals, the risk tolerance they have, the investment horizons they are going to have, and use this information to construct diversified investment portfolios. So once the portfolio is created, you have created this through this robo advisory, the portfolio is created, the systems continuously then monitors the performance and automatically rebalances the assets to manage the desired risk return profile of a particular person that is taking these services. Now, one of the advantages of the robo advisories is their affordability. Again, it comes to the affordability because at the end of the day, the cost matters, and be it a corporate or even in governments. So everywhere we check all those social responsibilities are there when it comes to the government, but then again it boils down to the cost, it boils down to the finances. So the affordability, the charges with significantly lower fees compared to the traditional financial advisories. So they will also offer the accessibility, so where the humans can handle maybe 10 calls in a day. So by using these robo services, so it will not have any limitation. It can handle unnumber of, rather than sleeping, going into sleep mode, so they can continuously offer these services 24/7. So with humans, there's a limitation. They can limit for these many hours. With these systems, there are no limits. They can work endlessly for 24/7. And then what happens is also while they're working 24/7, they're providing these professional wealth services. So robo advisors are also providing this transparency and consistency. Not that maybe sometimes when humans are involved, the transparency, we talk lots of times about the transparency issues. But when it comes to the robo advisories or things, so there's lots of transparency. You can talk to them and ask them why they have suggested it, way they have, what kind of the data they have used, they will provide you with, and this will be all consistent. So avoiding the conflicts of the interests is commonly associated with human advisories. So with advancement in AI, modern robo advisors are evolving into intelligent systems capable of adapting to the market changes and delivering dynamic real-time strategies. Now let me take you to these a little bit out there in terms of the evolution and what's going to be the future of robo advisories. So when we talk about the robo advisory, it should not be, you don't need to view it as a substitution story that robots are replacing the humans. It's not a substitution story. It's equally a question of a little bit of substitution is happening, but what is mostly important is that is how humans and machines can complement each other in financial. So while we are keeping, so for example, when it comes to the front desk, when it comes to the queries, maybe these robo services we can use. But when it comes to the back end operations, back end of these, so where you need humans to take decisions, so we need to have human involvement here. So these services that can be done with the robots or AI should be left to them, but in sync with them, the robots, in sync with the humans, they should go to the services, provide human services where it matters most and where there is a more value addition, where robots cannot take decisions on behalf of the humans. So human involvement has to continue. So now looking at the evolution of robo services, so it can be categorized into three distinct phases. So which is the basic automated, so you're doing like the basic automations. So for example, chatbots you might have seen when you open the bank website, they're like you see the smaller chatbots, then they are telling you the different services, the product they're offering and other things. So those are basically, when we say that there's a basically automations happening. Then we have the hybrid advisories where basically both machine and humans are advising you simultaneously. So while humans are seeing it, monitoring it, what kind of the services are being, what kind of the advice is being offered by the robots, so they are at the same time intervening and correcting and seeing where they can. So basically the hybrid advisories. And similarly, the intelligent AI-driven systems are being done. It will move to the next stage, which is the AI-driven systems. So not the humans will be driving, but AI will itself. So we will have made them autonomous. So when you remember in the first slide that I talked about, so there's going to be autonomous systems. So initially, robo advisory is focused on basic portfolio automations using predictive algorithms. However, a technological advanced hybrid model emerging and combination of the human expertise with algorithmic insights enhance the decision makings. Now, today what's happening is the industry, when we look at the whole of the financial industries, that it's entering a new phase that's characterized by the intelligent advisory ecosystems that are powered by advanced AI capabilities. And these systems not only make portfolio but also provide predictive insights. Like I tell you, there's a very predictive insights. How they are able to do it? Using the historical data, they conduct lots of scenario analysis, what if, all the scenarios, and then they generate these personalized financial narratives. The integration of these big data, artificial intelligence, and cloud computing has enabled robo services advisories to deliver hyper-personalized services, meeting the diverse need of the investors. So looking ahead, the future of the robo advisories lies in fully autonomous financial systems that can independently optimize investments, strategize excess risks, and then adapt to the changing market conditions in the real time. And what will happen is this will lead to the evolutionary path of robo advisories, where humans will be at the really at the top end, where the bigger decisions, the huge strategic decisions will be made, and the field will move from the basic automation to hybrid models towards intelligent AI-driven ecosystems. Now, it's very important for you. This slide is very important for you because this will talk about how what's the market of AI advisories and how you should take advantage of it while you are still in the universities, and how you should think your future and how you should recalibrate your career paths in terms of given the market size and the market growth of this. So right now the market growth of robo advisories is that it's not marginal innovations. It's not, don't consider it as a marginal innovation. So it's basically a rapid growth, global expansion is happening. That's including annual growth rate rate of 30%, which is huge. So on an annual growth, if you see, it's an annual growth of 30%, driven by digital adaptations. So the fintech that we are used, one of us using, the digital payment systems that we are using, and the investors' confidence in this particular field. So there are not just one force that is actually explaining this growth, but there are several forces that explains this growth, which is like advancements in AI, the wider smartphone penetrations, a stronger appeal to younger investors, especially millennials and Gen Zs, whose value convinces transparency and lower fees is out there. So those are all the forces that's going to determine the market of the robos, insurtech, AI in finance. And another driver is the feature innovations. So capabilities such as text loss harvesting, how we can do that text loss harvesting. So goal-based investing. So if you have a goal of maybe 6 months, 1 month, or you need this much and you have this much of investment. So again, so goal-based investments is their role is going to be huge out there. Real-time portfolio management that makes the platforms more attractive than simple low-cost alternatives. So if I look at from a research standpoint alone, I see that the key point is that the market growth is not accidental. It's linked to changing consumer expectations and the institutional of digitization of the finance. Now, having understood the AI in financial management, AI in personal management, robo-advisories, let me move towards make you a little bit of understanding of insurtech. So let's broadly discuss from investment management to insurance. So insurtech refers to use of technologies that includes AI, machine learning, big data and analytics to transform the whole insurance industry particularly. So the logic is similar to that of the robo-advisories. It will automate the process, reduce the cost, improve the efficiency, and personalize the services. In insurance, this can include underwritings. Underwriting is very highly service, very high-end services that the humans were providing, and they're being highly paid in the industry, in the insurance industry. And there are claims that are processing, including the fraud deductions, policy management. So one especially important feature is the use of these behavioral real-time data for personalized insurance products using user-based insurance. So for instance, these insurtech can adjust offerings based on actual risk profile rather than generalized assumptions. So it's not going to give you the generalized insurance policies or insurance products, but rather it will provide you based on, like I said, it saves your behavior, patterns, other things, and then checks you what kind of the risk profiling you have, and then will provide the services accordingly. So what will happen is that this will make insurance potentially more accurate, more inclusive, more responsible, while also changing the structure of the risk assessment itself. The way we are doing right now risk assessments of companies, it will have definitely completely changed it in terms of the predictive analytics that we are particularly talking about. Now, in case of the insurtechs, so you have automations, micro insurance solutions that are being provided. Microcredit, when we talk about loans, we're talking about microcredits. When we talk about these insurance, we talk about the micro insurance. So these all services will be now robot driven. So when we talk about the insurtech, so you don't have
have to have physical insurance policies. You're going to have the digital insurance, so digital life insurance similarly. So it's going to basically transform the whole industry, insurance industry altogether. Now, when it comes to the human element of the humans versus the machine, it's very interesting that this brings the whole debate to a critical point where we are seeing basically them not both as competitors of each other, rather than we need to make it as a relationship between the machine efficiency and human element. So AI can clearly reduce the heavy lifting tasks, like for example humans cannot work 24/7, but these robots or AI technologies can work the heavy lifting tasks that include the meeting preparations, the documentation, compliance work elements in financial planning. So that all can be done and taken care by these InsurTech, the machines itself. At the same time, we also emphasize the hybrid advantage, because where humans used to spend lots of time and energies on is these manual works that we can delegate into the machines. Now no more humans are involved here, but rather they are involved in many domains. That includes, like for example, advisory settings, AI plus human technology. We are here talking about now AI plus human beings outperforming them. So AI alone cannot do anything, humans alone cannot do. So we need to coexist rather than making it a competition. We need to coexist with the machines that can contribute to scales, that can recognize the patterns for us. Then the human contributions, we need to have empathy, which is like completely missing in these AI systems. So the empathy part of it needs to be here. The context in which we are making the decisions, again, the AI cannot do that. AI cannot replace it in terms of empathy, the context, and the trustworthiness. So those all things have to be there when we're talking about the AI plus. So this matters especially in life events in finances. So AI may optimize the portfolio, but it cannot truly comfort a widow, for example, or celebrate a child's university acceptance, a guidance to client through emotional complex transition in small ways a human advisor can. So the real question is not whether AI can replace advisories, but rather it should be that advisory functions become automated and which will remain fundamentally human. So human element has to be there. You cannot replace completely the human element. Now, at this stage, we have seen the promises of AI in personal finances, both through personal finances, a larger and a bigger picture when we talked about the financial management as a whole. So both through the investments and insurance applications. So the next step is to evaluate that promises more critically. So shifting the narratives in wealth management. So backward industry integration. The industry traditions moves from product to planning to clients. The requirement will. So management must start with human beings, understanding their life, their families, the goals, and then work a balance for to financial planning and investment products. And similarly, when it comes to the behavioral planning, the financial frontier is behavioral planning, understanding the client's financial traumas, which a human can only understand, and not a machine can understand that. So why they might not follow the mathematical optimal advices all the time depends on the context, the empathy, the situation, the trust element. So in particular, we need to weigh the benefits against the governance, the ethical considerations, while at the same time looking at the operational challenges that accompany wider adaptation of the AI technologies. Now, when it comes to the institutional adaptation and the market challenges, there are lots of success stories AI that's happening. So where we talk about, uh, for example, there's one particular company which I wanted to talk to you about is Lemonade. So it's basically a US based insurtech firm. So that utilizes artificial intelligence, behavioral economics to automate policies, insurance policies, and claim processing, thereby enabling near instant claims. So almost instantly those claims are settled. So Lemonade is presented as a case where AI, behavioral economics, automated policies, and claim processing enabling very fast systems. So similarly, if you see in China, in case of China, there's one platform by the name of ZhongAn. So what they provide is they provide micro insurance solutions at an affordable rates for specific events such as travel delays, e-commerce transactions. Again, this Zohong and highlights how micro insurance offering low cost specific coverages like the travel delays I talked about, e-commerce related protections. So this shows AI can support productive innovations, not just the process efficiencies. Now, when it comes to I told you there are success stories in terms of firms with existing direct D2C, direct to consumer behavior, such as Vanguard, Scalwab, have successfully integrated these large scale robo advisories. Similarly, we have seen certain, not that everybody has been successful, there have been failures as well. So, large mainline institutions that includes JP Morgan, RBC often struggled because they were unwilling to disrupt. So they were not accepting this AI fully into their domains, or they were embedding these technologies, and they were not ready to accept these disruptions for their existing revenue models, the fees, the traditional cost to compete with low-cost venture-based startups. Similarly, then we have seen the efficiency plays. So AI allows the advised models to move downward markets, making professional wealth management accessible to individuals with less wealth by reducing service costs. Now, as promised, we are moving towards the benefits and the challenges of AI in finance. So there are substantial benefits, as I talked about and mentioned all throughout my presentation. So AI will enhance the personalization of the services. It will lower down the cost. It will improve the accessibilities. It will accelerate the decision makings through the real-time data analysis and tailored recommendations. So these advantages can lower barriers into financial markets and high quality financial tools that will be available to populations that were historically underserved. So however, there are serious challenges as well. So financial data is highly sensitive, so privacy and cybersecurity risks are central concerns. There are very immense concern. So in addition, the algorithm's bias can produce unfair outcomes, which we have seen, or maybe when you as a student, and I have also faced. So for example, giving prompts to ChatGPT and then it hallucinates, giving you wrong answers or wrong things. So there is where our human intervention is needed. So you need to look at the algorithm's biases that can produce the outcome if the system, basically the system they are trained or is either is on distorted data or incomplete data sets. So there is also a regulatory challenge. So regulators are not able to compete with or they are not able to set the regulations as far as the technology, the base of the technology is going on. So the policymakers and institutions must develop framework that ensures transparency, fairness, accountability, and while they do that, ethical AI deployment in finance is the need of the hour. So you cannot stop it at the same time. As a researcher, this means we should both have technological optimizations and technological pessimism as well. So while we are optimistic, but at the same time there's a pessimism as well. So that the AI should not completely replace the humans. So the key governance is to preserve innovations while controlling the risks. Now, when it comes to the future trends and with this, I will also conclude the whole presentation. The future of AI driven personal financial management is characterized by the transition towards fully autonomous financial ecosystems. So, what emerging trends, including the adaptation of AI powered ESG, which is environmental, social, and governance investment, integrating voice enabled digital assistances, and the rise of embedded finance within everyday applications. So, financial institutions are increasingly focused on developing intelligent systems that can anticipate the user needs, optimize financial decisions, and deliver seamlessly user experiences. So, in regions such as Middle East, South Asia, Southeast Asia, Asia as a whole, the African region. So rapid digitization has supported regulatory framework that are accelerating the adaptation of AI in AI financial services. So governments are investing heavily. You would have seen, you would have heard in the news is the way UAE is spending and investing in AI related technologies. So they are heavily investing in fintech innovations, fostering economic diversifications and financial inclusions. So in conclusion, I'll say AI is driven robot advisories, insurance tech solutions that are revolutionizing and are going to, we have seen a part of it, but they are going to in future revolutionize completely the personal finance by making these financial services more accessible, efficient, and more personalized. As technology continues to evolve, these innovations will play a central role in shaping the future of global financial system. So, as we are coming to the end, so I'll suggest or see that before I open for the question and answer. So the ultimate value of the AI is not replacing the advisory, but it is architecting smaller, smarter, more compliant, and highly personalized ecosystems. So with this, I'll stop and I will let you have the question and answer sessions. So please feel free to ask and if there are any questions at all. Dr. Zareen, over to you.
Yes, all right. Thank you so much, Dr. Bilam, for a very insightful presentations. Any questions from the students? Oh, Dr. Bilam, we got questions from one student. So looking for her to deliver her questions.
Sorry, Dr. Zareen. I mean, actually, there was a call. So there was a call from the university, so I had to just attend it. Short call. Sorry. Yeah, please go ahead.
Okay. Go ahead, Aura.
Okay, thank you. First thing first, thank you for the opportunity. Do I sound okay or am I?
Yeah, I can hear you.
Yeah.
Please go ahead.
Thank you. So my question is, so regarding AI, especially in financial industry, so AI often creates the illusion of competence, which AI tools delivers answer with polished fluency and confidence that make this an illusion that the one who use the AI feels like they are competent. They are that competent, even though the solution or like this decision itself made by AI. So, in terms of financial industry itself, do they have any regulation or like any policy to regulate that? So, well, we as human don't really need to worry about the illusion of competence itself. Especially in financial industry, we have a lot of technical a lot of technical issues and a lot of things like that. So I just want to know your opinion about that. Thank you.
Thank you, Kamala, for asking such a beautiful question. When it comes to the, because of the AI system, the moment we are adapting to these AI systems, and there is an illusion that they can be sometimes, like I talked about, like the hallucination that happens. And but because like we as humans at times believe that the kind of the advices or that is the recommendations that comes through using AI will be accurate, and that gives us very confidence. And when we really check it, it's not appropriate. It's not correct one. So to check that whether there is a regulation of that sort that deals with. So as of now, globally we have not seen, but European Union is working towards having some regulations around such kind of the issues. But as of now, there are not regulations because, as it mentioned in the presentation itself, the regulation is not keeping the pace with the fast moving this technology. So regulators have to catch up to those to see that how we are going to address such kind of issues. And at the same time, the systems are also improving, where we have seen less of the instances, the accuracy in terms of the results, the outputs have increased over the time. So these models have, because earlier if you would have seen the ChatGPT, or because that was from OpenAI, that was accessible to the public at large. So we have seen that time the data that was fed to the systems were really very outdated. But now the new AI systems like DeepSeek and other things, they are trained on Grok, or they are trained on the real-time data. So means like again, it's they are fed with the real-time data. So when the real-time data they are being fed with, so means like the decision making, the model's efficiency increases. So you will see less of the outcomes, undesired outcomes using AI. And on regulations, yes, there are governments that are working towards it, but not fully where we can say that they are completely safe as humans. No, that doesn't exist. But in EU particularly, there are lots of regulation. They're working on AI and overall AI, not just the financial industry. I hope it's clear. Right?
Yes, it's clear. Thank you very much, sir.
All right, thank you. Any other questions from the other students? Other questions? All right, maybe I'll just ask questions while waiting for the others. Perhaps they're still shy and still trying to process everything. Because like this,
That's absolutely fine.
yeah, this topic is fairly new, probably for them. But I feel like it's a very interesting topic. That's why this is the one that I suggest to propose to you to share to us. And basically, Dr. Bilal, looking at your presentation previously, I feel like it's very interesting when we talk about how AI technology and this sort of things can actually help us to have a more personalized personal financial management, right, and more personalized financial advice. But like I feel like the AI or the technology here, like, or if we talk about like robo advisory, like for them to be able to give us a very very strategic or very right advice, they'll need to know a lot about us, right? They'll need to know about our spending, our habits, about our investment, about our condition, maybe also like our health condition and our everything about us, right? The more they know, then the better the advice that they can give, right? Because it's gonna be better. Like when they have more database here of us, then they'll be able to provide more personalized, more personalized service, more personalized advice and all, right? Yes. But the thing is, this wonder, does that also mean that we're actually basically here risking our data privacy? What's your thought on that? Like, there's going to be a trade-off on it, but I'd like to hear your thought on this.
Thank you, Dr. Zareen, for raising such an important question. It's very interesting and very important. The moment we are installing any app on our mobile phones, they ask for the permissions to our using phone, the mic, the contacts, other things. So we're basically allowing them to have those. So the moment we allow them, then they deep down what they do is we are sharing all our personalized data with them. And what happens is then they use these data points, and probably or mostly what we have seen, allegedly it is being told that they sell these to bigger companies, where then you will see the personalized data, that's personalized streams. So for example, if you're using Insta and you're using particular video streams, so you will see those kind of the video streams now being fed to your Instagram, Facebook, LinkedIn. So what is happening is they're collecting your private data, and based on that feeding you the advertisements that they think that you're going to consume. So that's where similarly AI, when it comes to the role of the AI, so they're basically collecting all your personalized information, which is very personal. At times humans don't want to share it, but by means of permissions you are doing that. So there's a huge risk of at the same time, while we are talking about the efficiency, we are talking about cost reduction, we are talking about lots of things, efficiency that is going to, availability is going to be, the accessibility is going to be, but at the same time it is coming at a huge cost, and the huge cost is this, we are compromising on personal data, and we don't know that how these systems are going to use this personal data. Is it only for our benefit, where they are going to give us personalized financial advice, or is it like for treating us as consumers and then selling the product and the kind of the things that we are going to consume? So that kind of risk is hugely involved, and there are debates, there are policies, there are the governments worldwide, they are trying to work on it, but it doesn't seem so we are still anywhere nearer to where we are. Where it will be safe to say that we are completely safe in these settings. So yeah, that's where we are right now. But thank you for raising this important question. So when we're talking about so much goodness, benefits, but it's coming at a huge risk, and the huge risk is compromising on our personal data. So we are basically sharing lots of personal data which otherwise have to be personal, which most of us don't love to share. But the AI system can work better on the moment we fed it with better data. So again, so the trade-off between the two, so it's a dilemma.
Yes, that's true. Thank you so much for your answer and insight, Dr. Brillo. So, when it comes to the discussions, it's been especially about insurance. When we talk about insurance, it's actually it's like even in traditional finance without having to talk about AI and robo-advisory sort of things. Like when the insurance company knows more about our situations, especially if we are actually in this risky category according to these insurance companies, then they will charge us a higher price for our insurance policy, right? But then in this case, do you think it's going to be the same like when we're talking about robo-advisory and those sort of AI-driven AI-driven products, when it's applied on the insurance industry? Do you think by having this AI-driven robo-advisory or AI-driven insurtech, let's say if you applied in the insurance industry, then it's insurtech, right? Do you think it's actually gonna risk us? It's gonna make us actually have to pay more, especially if we are on the risky, in the risky economic class or in the risky category according to these companies and the algorithm behind it. What do you think? So do you think it's actually going to work against us as a customer?
We are definitely, when it comes to the financial industry or insurance, we teach students there are two kind of issues, which is the Lemonade problem and then basically the asymmetric information here we can or the adverse selection. So Lemonade problem and the adverse selection. So when it comes to like rightly you said that somebody when AI is having lots of information about us and we fall at the category in the high risk. So obviously the premium that they're going to charge is going to be higher as compared to what they would have normally charged. Which I think is fair enough, but on type on customers it's going to be costly. But at the same time, because since it's a true picture of yours, so the true picture of yours should get reflected in the premium as well. So I don't think so there is an issue. But the issue really will come when AI will be, when AI is settling down the claims. So they have set, the humans have set the parameters, these are the particular parameters for settling the claims. So even by, for example, 1 second somebody missed the flight or something, whatever happens. So maybe AI might have like you need to be 1 minute earlier or whatever the reasons. So the human, that empathy element, the context and the trust element, which will be completely missing out in the AI system. So that's a big issue where I see that lots of unfairness, lots of claims might not be settled because of such reasons. Where we need like, we have the empathy consultations. So somebody is old, somebody is sick, the medical aids that time. So when human element is involved, to human interactions, so they settle those claims. But when it comes to the robos, when it comes to the insurtech, so they will not have the competence. They don't have that empathy for the humans.
Yes.
They don't have that trust element is missing. So they don't have the context in which we are, what kind of like is it medical emergency, the extent is happening. So those things when it's completely missing, and then on behalf of humans, these insurtech, these applications are taking decisions. So I think that's the main issue where they should be focusing. But yeah, for me, I mean personally, I feel it's going to put individuals at a disadvantageous position by having higher risk. So they will have to pay higher premiums. So it's going to be a disadvantageous position for the consumers, but yes, an advantageous position for the corporate or the insurance companies.
Yes, that's true. Right. Yeah. Thank you so much, Dr. for your insight. Yeah. I guess to wrap up, I just would like to. I'm just wondering. I just would like to ask this one question to you. Like, personally, what is one financial products or like financial decisions or insurance decisions, especially because we talk about insurance, that personally would never trust AI to pick for you right now?
Okay. So the personal things that I trade, so I have some investment portfolio. So I give AI the prompts and ask about the recommendations out of 10 stocks, which particular stock they'll choose for me. And then once they choose any stock, I'll never trust that. I will never go for that. I'll do my still basic due diligence. I'll still go with not the past historical data. So for example, take the case like before this geopolitical war happening out here in Middle East. So if you would have normally given the scenarios to AI, should I invest in oil and whether the crude oil prices will go up, or for example the gold prices will go up. So normally it would have not oil prices because given the past historical data and other things. So but just because of the one event, everything changed. So you know that you cannot rely completely on AI on these devices. You need to have that vision. You need to have that experience to filter that and finally take that decision of your own. Because at the end, the onus lies on the human beings, and the onus does not lie completely on AI. So AI, so there are like talks going around globally, the discussions. So should we hold AI accountable, something which they have suggested, recommended. So even if you held what kind of the obligation or what kind of the legal framework you are going to hold, and that's a debate going on, that's a discussion going on. But that's the personally something that I told you about. I will not go with the recommendations. I'll do my own diligence. But yes, that helps. That helps with lots of trends. That helps me rather than going individually to these all tech companies, understand the financial, understand these things. But because of the AI, it will simplify, it will summarize me, everything, and based on that, I'll be able to take the decisions. But the decisions has to be my own, not other than completely relying on the AI systems.
All right, great. I guess that's a very great advice and insight from you. Thank you so much, Dr. Bilal. Any other questions from the students? You know? No? All right. I guess if there is no other questions from the students, we can wrap up today's sessions. Thank you so much, Dr. Bilal, for giving us your time and sharing a very insightful and valuable presentation sessions with us. We hope that we can meet again in another sessions by discussing relevant and another interesting topic relevant to today's trend. Thank you so much, Dr. Bilal, and thank you so much, everyone. I guess that's all for today's sessions. Yeah.
Thank you, Dr. Zareen.
Thank you. Yes.
For the Airlangga University. I really appreciate the questions. I would have loved to have more questions because given the number is very huge. It's around 160 more students. It's like really huge. Thank you so much for bearing with me, for having the patience through studying, through being throughout here. So it was wonderful. I expect and hope to continue the relationship with Airlangga University, Dr. Zareen, and Bahrain Polytechnic, where I'm based. So happy to allow to collaborate and see sometime if we can physically come. I can come down to your university, deliver a talk, interact with the research scholars, help you out in the research, see that how we can collaboratively work on joint projects. And especially I want to reach out to the students, saying that wherever they need my help in research, particularly in financial domain, please feel free to reach out to me. For my contact details, you can reach out to Dr. Zareen. She has the details. And you should be proud of being students of Airlangga University that gives you a chance like this, where people from internationally, not to the locals only, but people from internationally are coming, delivering the talks to you, so that we should be really, really proud of Dr. Zareen, Airlangga University, of your department, and make us proud by shining, by studying hard, by focusing on what is supposed to be your domain of expertise. And always try to see, one of my intentions behind this elaborate discussions was to tell you where you should focus more on, and you should be clear about what's happening in the future, so that you accordingly make your careers, make career choices. So that's something that you need to always keep in mind. So with this, we should, I think, wrap it up. Thank you so much, Dr. Zareen, for this lovely, wonderful morning for me over here. It started with. So yeah, let's continue the collaborations with you all.
Yes, definitely. Thank you so much, Dr. Bilal. It's our pleasure to have you with us today. Thank you so much, and see you again on the next episode. Thank you, Dr. Bilal. Bye. Yeah, Assalamualaikum.
Assalamualaikum.
Recording stopped. Sorry.